One of the most important tips that you need to remember when you are buying real estate is to know the market trends in the area that you're buying. Is it a buyer's market or a seller's market? Knowing this information is going to potentially save you thousands in your real estate deal. So as a nation, as we are moving from a very strong buyer's market into a seller's market, today I'm going to break down seller concessions. But before we jump right in, I want to note my particular outfit and decor of choice today. TCU is going to face the Georgia Bulldogs in the National Football Championship, and I'm here for it. I could not be without my TCU gear today, my fan gear. And even though this video will air well after the game is over, we still in our household will be saying, "Go Frogs!" All right, now that we have TCU covered, what is a seller concession? Well, in a real estate transaction, a seller concession is when a home seller offers to pay for some of the home buyer's closing costs. So this can be in specific expenses or a percentage of the purchase price. Generally, a seller's concession is used in a slow-moving market when a seller is looking to attract more buyers to purchase their home, to make their home more enticing, the deal, if you will. For a buyer, when you allow a seller to pay some of your concessions, some of your closing costs, you are going to be able to keep some of your cash reserves. So this means that you can put down a larger down payment and buy down those payments, or perhaps you can save that cash and keep it for that remodel that, your wife is looking at doing immediately when you get in the house. So there are a lot of closing costs, and there are 1,000 different ways that you could dice up a seller concession on either side, seller or buyer, in the negotiation process. But some of the typical terms that you could do is you could negotiate repairs that need to be done in the house. You could do any kind of prepaids. You could do loan fees. You can do mortgage insurance, and you can also do buying down the buyer's mortgage points. Now, having said that, there are limitations on the seller concessions based on the type of loan that the home purchaser is taking out. If the buyer is taking out a conventional loan for a residential home loan, the seller can pay between 3 and 9% of concessions towards the total purchase price. So basically, the more money that the home purchaser puts down towards the home purchase, the higher the amount percentage that the seller can pay in concessions. The purchaser is using a government-backed loan, then the concessions are limited regardless of the down payment that the home purchaser is putting towards the purchase price. So if they are taking out a VA loan, that concession limit is limited to 4% of the total purchase price, and for an FHA or a USDA loan, they are limited to 6% of the total purchase price for seller concessions. Now, having said that there are limits doesn't mean that the seller has to pay 4%, 6%, 9%. That is all up for negotiation, right? It really does depend back to the top on those market trends and just how desperate are those sellers to sell their house. Seller concessions can really add up to huge savings for both the seller and the buyer of a home purchase. So when you're going to purchase, go back to your tips and tricks and make sure that you know the market. Use a local real estate professional that is in that market every day to help guide you in what is trending in concessions in particular areas and neighborhoods. And as always, we post new videos every Thursday. We'll see you then.